Today, I want to talk about how Antara is currently flipping long on AMC and Ape, and is preparing to make billions of dollars from the squeeze. Antara has sold off their put options, they've exercised their swaps for more shares, and they've even purchased more shares on top of that. I want to explain exactly why they've done this, and how Antara is actually what's known as a White Squire. So stay tuned, and let's make some money. And now I want to dive straight in with the key information. So, as Frank's Place has tweeted, here's Antara's latest Form 4 that discloses even more AMC and Ape transactions. So Antara has just filed this additional Form 4, selling off their remaining put options and also exercising these total return swaps to get even more AMC shares. Here Antara have sold off another 160,000 put options, and they've also purchased 3.5 million Class A common shares, which is those AMC shares, and an extra 1.5 million and an extra 1 million on top of that. This adds to the additional Form 4 that came out a couple weeks ago, where Antara sold off another 160,000 put options. So obviously Antara has been selling their puts because they expect the AMC price to rise, and they've doubled down by even purchasing more shares on top of that. But it seems that buying an extra 6 million AMC shares wasn't enough for Antara, as they then filed another Form 4, buying an extra 500,000 shares on top of that. Antara has been selling off these puts and exercising these total return swaps, building up a massive AMC stock position or a massive AMC long position, and selling off their shorts. As Darren tweeted, he said it looks like Antara is selling their puts and is loading up on calls. He said they're going almost completely long. He said, I don't want to jinx it, but combined with everything I'm seeing on my charts, he said it's pretty incredible. And he says, let's see what happens next week. Matthew has tweeted explaining that Antara has been selling off these puts and purchasing more shares because Antara is actually a White Squire. Now you might be saying, obviously, Tom, what is a White Squire? Well, a White Squire is an investor or friendly company that buys a stake in a target company to prevent a hostile takeover. Now, we've speculated many times that AMC was going through an attempted hostile takeover by one of the shorts. Obviously, if one of the shorts took over AMC, they could simply take out more debt and more loans and actually bankrupt AMC as a company. Effectively, if one of these shorts purchased the entire share capital of AMC, they could simply turn around and close the company, having it delisted from the stock exchange and making everyone redundant. And effectively, this is saying that Antara stepped in, purchased tons and tons of these shares that were issued by Adam Aaron to prevent this hostile takeover. Antara may have quite literally saved AMC from bankruptcy and also made money on both sides of the trade in the process. They knew the shorts were pushing the price of AMC down to enact this hostile takeover. Therefore, they made money with their put options, and now they're buying tons of shares, preparing for the squeeze. And it says this is similar to a White Knight defense, except the target firm does not have to give up its independence as it does so with the White Knight, because the White Squire only buys a partial share in the company. And again, this is exactly what happened. Adam Aaron didn't sell the entire share capital or the entire float to Antara, only selling off a large enough portion to rescue them from this hostile takeover. Antara managed to rescue AMC from this hostile takeover while still leaving us as the majority shareholder, owning the majority of AMC and Ape's floats. It says White Squires obviously don't take controlling interests, rather it's just large enough to block the binding company. And incentives often offered to a White Squire investor can include discounted shares or hefty dividends. And effectively that's exactly what Antara got, buying those Ape shares at the very bottom of the Ape price point, obviously already capitalising from the rise in price. Antara have managed to save AMC and profit massively in the process, while they're loading up on call options and shares, preparing for the squeeze where they're about to make billions. Now on top of that, this obviously comes at brilliant timing, as Unusual Wells has tweeted saying that more than 3,000 hedge funds have shut over the last 5 years, far exceeding the number of launches during the same period, per Bloomberg. Also guys, be sure to join me over on Moomoo, the sponsor of today's video, by using the link in the description below. You can currently get up to 17 free stocks, entirely commission-free trading, free level 2 market data, and most importantly, Moomoo is very easy to use, has tons of technical indicators and advanced charting tools. With Moomoo, you've also got entirely free 24/7 customer support, and you can also trade around the clock with full extended hours. So it seems like over the last 5 years, hedge funds have steadily been going extinct. And I don't think it will be longer until, as Mr. Ape tweeted, there's going to be a massive chain of dominoes. I think obviously as some of these smaller hedge funds or some of these smaller shorts start collapsing when the price of AMC rises, it's going to cause a massive domino effect, potentially bankrupting the entire hedge fund industry. More than 3,000 hedge funds have already shut over the last 5 years and very few have actually opened. But why does Adam Aaron and Ehor think that even more shorts or more hedge funds are going to go under? Well, Ehor recently spoke on Yahoo, giving an interview at the very start of March about the most squeezable stocks for the month of February 2023.
Some of the companies that have either been part of the meme or Reddit retail trade in the past, or even at companies that have had precipitous declines over the course in 2022, or is there something else that you would be looking for under the water?
Well, meme stocks help because define a squeezable stock because they're tighter. They have a larger percentage of their short interest that are shorted. Their trading volume goes up and down a lot. But really, I'm looking at losses. Like I said, no one gets out of a profitable trade. You see something like Lucid's has a big move in the past couple of months. That's a squeezable stock. Shorts are bleeding on this name. AMC, same thing, especially with the new APE shares that are possibly getting into play. There's a lot of P&L that's sitting around and causing shorts to double think their positions.
And what then tends to trigger that short squeeze? Is it, in some cases, maybe a news event that sends the stock higher? Is it more sort of a market momentum situation? All the above? What ends up happening?
Sure. I mean, market momentum plays in both the long and short side. That's become a new piece of the puzzle in the market now. Before, everyone's a value fundamental investor, and you kind of said, oh, is this company profitable? I'm going to buy it. Now you got to watch out that, hey, this might be a profitable company. The street hates it. I lost money. So we're looking at both sides, and our new map product is looking at the crowded longs and crowded shorts and squeezable shorts.
So right there, Ehor is basically saying that none of these hedge funds exit a profitable trade. Basically saying that if companies are making money, they buy the shares and the stock goes up. And typically if companies are losing money, they short the stock and the stock goes down. And while the stock continues to go down, they won't close out of that short position. And obviously that's why, as Adam tweeted, his plan is to turn AMC from a loss-making company where shorts short the stock to a profitable company where hedge funds and companies and institutions will actually buy the stock, pushing the price up. As Joe tweeted, he said shorts attack companies they feel they can destroy. Shorts obviously attack these companies that are loss-making, trying to push them into bankruptcy. And he said, therefore, if you become a successful company and generate profit, you destroy a short's thesis. Hence, there's no logical reason to continue shorting or to continue in their trade. Obviously, if AMC becomes profitable and the share price goes up, these shorts no longer have a reason to stay in their trade and will close out of their short positions. Now you may say, Tom, surely some of these companies that have sold billions of synthetic shares won't be closing out of their shorts because they know it would mean bankruptcy. And well, that part I absolutely, completely, 100% agree with. It won't be these giant shorts that have shorted billions of synthetic shares that are first to the exit door. It will be these smaller companies that have shorted fewer shares, haven't committed any illegal crimes, and actually don't face imminent bankruptcy. But obviously when these smaller hedge funds that don't face imminent bankruptcy are closing out of their short positions, maybe it's a couple million shares here and there, maybe it's 10 or 20 million shorted shares, maybe even more, that will push the price of AMC upwards, effectively liquidating those bigger shorts. Again, you effectively run into this exact same domino problem. When these smaller hedge funds start closing out of their shorts to save their company before it goes bankrupt, it sets off this domino chain reaction, liquidating the bigger shorts as well. And that's why, as I've always spoken about, during the AMC squeeze, we're likely to see multiple waves of liquidations. We're going to see those smaller shorts exiting their positions, then we're going to see some slightly larger shorts being liquidated, then we're going to see some slightly even larger shorts after that being liquidated as well, until we finally have the mother of all liquidations, where even these biggest, most illegal and most criminal hedge funds are liquidated as well. I think a perfect example, as tweeted by Biotech Moose, is this image of a lobster in a pan cooking away. The lobster is the hedge funds and the banks that are currently shorting AMC, and more heat is being added to the pan. We've got AMC's post-pandemic recovery, we've got their investment in Hycroft mining, we've got AMC selling APE shares to raise capital to pay off debt, Perfectly Popcorn being sold in Walmart, retail voting yes, and many other smaller catalysts that will trigger the larger squeeze. Effectively, the only remaining heat that we need to add is AMC becoming profitable, smaller shorts exiting their short positions, slightly larger shorts being liquidated, and slightly larger shorts than that being liquidated as well. As the lobster says, the water seems to be getting hotter, but are you sure it's okay to keep shorting? These hedge funds and banks are going to unknowingly continue shorting until at some point those smaller hedge funds exit the trade, and then these bigger hedge funds will be left with no escape during the squeeze. Right guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.